Welcome, Patrick Mardini, to the Alternative Frequencies podcast. Thank you for coming from all the way in Tripoli to Beirut. So let's begin with the questions here. To begin with, can you give particularly our international audience a brief chronology of how the financial and economic crisis in Lebanon unfolded, the scale and speed of the collapse, and how it has impacted Lebanese society?
Lebanon is suffering from at least 5 simultaneous crises today. You have a debt crisis. Government defaulted on the payment of the euro bonds, which is the dollar part of the debt. But if you take the entire debt, it's around $90 billion at the old exchange rate. So the Lebanese government have been accumulating debt per year, and now they reach a point where they cannot pay back to their lenders. The second crisis is a banking crisis, where people are unable to withdraw their deposits from the bank in the currency of their deposit. Most of the Lebanese people deposited their money in US dollar because they were afraid of a devaluation of the local currency. But today they are unable to withdraw those dollars from the banks, and the banks would only give them out in Lebanese pound at a very unfair exchange rate. So the third crisis is this currency crisis, where the currency lost more than 80% of its value. It led to hyperinflation. Prices have increased dramatically. Based on official estimation, prices increased by 150%. Based on some international estimations, prices increased by 350%. So huge increase in prices. Hyperinflation, basically. And the fourth crisis is actually the recession, the economic recession. Growth is estimated to be negative 20%, somewhere between negative 20 and negative 25%. That's a sharp contraction of the economy. That's real economic growth. And if you combine the negative growth, which means the economy is getting smaller, with the hyperinflation, it means that what you are producing now in Lebanese pound, its value in dollar is way less because of the devaluation of the currency. You would see that the Lebanese GDP in dollar in 2019 it was around $52 billion. In 2020 it is estimated to be $18 billion, from 52 to 18, due to the double impact of the real recession, 20 to 25%, and the major hyperinflation or the major devaluation of the currency, which is, the currency lost around 80% of its value. So that's the magnitude of the crisis. It's a very big crisis. Actually, and since it is 4 crises, I think that we need to think about it as 4 separate issues and try to deal with them one by one.
Okay. Well, the obvious question here is, were there any warning signs of what was to come? And could the Lebanese central bank have done anything prior to 2019 to at least offset such a rapid descent? Specifically, I want you to comment and explain to our listeners the central bank governor Riyad Salameh's financial engineering strategy prior to the collapse.
Yes, so in 2015, the signs of the collapse started to show, right? Banks and markets in general did not want to lend any more money to the government, right? They believed that the government debt was unsustainable, and they did not want to lend money to the government anymore. And this is where Riyad Salameh came in, the central bank came in and said, okay guys, don't lend money to the government anymore, give me the money, to the central bank. So he started taking deposits from the commercial banks at a very large scale, okay? And the way he motivated them to continue continue depositing their money at the central bank was through high interest rates. So in 2015, the banks did not want to lend the government anymore. And what started to happen, we started to increase interest rate. So the central bank started to offer very competitive interest rate to the bank if they placed their money at the central bank. And this was a good deal for the bank. So they started progressively placing their money at the central bank. And year after year, the government continued to need funding. So we continued, the central bank continued to increase interest rate, and the banks were basically going everywhere around the world, talking with all the expats, encouraging them to deposit their money in Lebanon at high interest rates so that the bank can take them again and deposit them at the central bank at an even higher interest rates. That's part of the financial engineering. The other part of the financial engineering operation is that the central bank actually did not lend those dollars to the government directly. Okay? What they did is the central bank kept those dollars and lended an equivalent amount, actually lended even more than what they collected in Lebanese pound to the government. Okay, so the central bank started printing Lebanese pound to finance the government. We increased the money in circulation to fund government in Lebanese pound while keeping those dollar reserves at the central bank in order to protect the Lebanese pound, right? So if you look at the data, back in 2014, the banks used to hold 60% of the government debt, and the central bank used to hold around 30%. If you look today, it's actually reverted. The banks hold only 30% of the government debt, while the central bank holds around 60%. It means that the bank, since 2014, basically before the financial engineering operations, everybody saw the crisis. They wanted to disengage from government funding, and basically the central bank took it over and started to lend the government. So the bank went out, and then the central bank started getting more exposure to the government. And this system of printing Lebanese pound, even if you give those Lebanese pound to the government, the money will end up in the hand of the population, or even the government, that when they will take those Lebanese pound printed by the central bank, right? They want to buy fuel for EDL, for example. So they need to convert them to dollar. So they went to the market and started converting them to the dollar. That's where the central bank started losing its foreign exchange reserve. And those are the losses everybody talks about. Even the money that the government spent in Lebanese pound, well, this money ended up in the hands of the population, and the population started consuming imported things. So they also needed to convert it into dollars. Where did they find the dollars at 1,500 Lebanese pound? They found it at the central bank in Fine. And that's how the central bank started losing those foreign exchange reserves that he accumulated. And that's how we got the overvalued exchange rate, right? The overvalued exchange rate is the idea that we were defending a 1,500 Lebanese pound exchange rate, while in reality you had a big demand for dollars. People had a lot of Lebanese pound. They wanted to convert it to dollar. And if you had allowed the market to adjust, you would have had more than 1,500.
Okay, so then that brings us to today, the current situation. Let's talk about where we are now. What is your assessment of how the central bank has managed the crisis so far? The lira's decline continues with no respite, and the central bank, despite setting several exchange rates, seems incapable of controlling the Lebanese pound's depreciation.
Yes, in reaction to the current crisis, the central bank adopted a system called the managed float. Which means he allowed the Lebanese pound to float on the black market, of course, and he tried to manage the devaluation through interventions on the market by supplying dollars via the subsidies program that they designed with the government. So the exchange rate is floating on the black market, of course. We did not recognize it yet officially in the official rate, but in reality, the only way to get $1 today is to pay 12,500 Lebanese pound. That's the black market rate. If you want to pay 1,500 Lebanese pound, which is the official rate, you won't be able to find any dollar. Even if you are willing to pay 3,900 pounds, which is the bank's rate, nobody would give you a real dollar for this price. So the only way you can find actual real dollar it is at the black market rate. So the black market rate is the real rate, and it's a floating rate. It changes every day, right? Now the central bank is intervening on the market by pumping dollar in order to slow down this devaluation. And the way that he is doing it by saying that the importers of specific items, and here I'm talking about fuel, medicine, and wheat and some food items. The importer of those items, they can come and get their dollars from the central bank at a subsidized rate, okay, instead of buying them from the black market. By doing that, he's basically injecting dollar in circulation in order to manage this devaluation. Now, I believe that this policy is catastrophic, and I believe that you can just see the consequence of these policies right now. Instead of having a floating currency, we have a sinking currency. The Lebanese pound keeps on losing its value day after day with no limits, right? With no bottom. We will never reach the bottom. And there is a reason for that. In a country that suffers from hyperinflation, from a negative growth, and people who don't trust the currency, they are basically escaping from the currency. You cannot have a floating system. It simply does not work. If you have a stable economy, with people have confidence in your currency, you can go for a floating. That's for a floating system. That won't be a problem. But in the specific circumstances of Lebanon today, I think the floating exchange rate means more devaluation and more hyperinflation. And the intervention, the managed part of the managed float, has led to a massive loss in the foreign exchange reserve. If you look 1 year ago, we had $30 billion in reserve. Today we have only $15 billion in reserve. So we have a massive draining of our foreign exchange reserve because of this managed thing, and we have a massive devaluation of the currency because of the float thing. So I do believe that the managed float have been a big mistake, and the currency will keep on devaluating, and the central bank will keep on losing their reserves as long as this monetary arrangement is maintained.
I see. As you know, there's a three-way struggle has been going on for quite some time since the crisis broke out, and since the government's been tinkering of how to fix it. So they've been arguing, the government, the major banks, the central bank, over how to divide up the billions of dollars of estimated losses, with each side trying to make the other pay for those losses. Where do you stand on this debate, and is it a prerequisite to saving the economy?
It's not a prerequisite to saving the economy. I am going to start with this last point, and then I'll talk more about the debate. I mean, it is very important to solve this problem, but we cannot wait until we solve this problem before we kickstart the economy. We should be able to kickstart the economy because this problem would take time to solve. And I'll talk more about it. So the banking system made some losses because the banking system deposited their money at the central bank. The central bank lended the equivalent of those dollars in Lebanese pound to the government, and with the devaluation of the currency, what the government owes the central bank, if you convert it into US dollar, it's nothing now, right? And so basically there is big losses, and those dollars that have been kept by the central bank already lost them trying to fix the exchange rate in the past years, right? So that's one part of the losses, which is the losses of the commercial bank's deposits at the central bank. Another part of the losses is that the government defaulted on the Eurobond, on the payment of Eurobond. We know that there will be a haircut to the Eurobond holders, to the government bond holders, and banks are holders of some bonds, so you expect them to make some losses on government bonds. And the third type of losses is that since you are in a recession, the private sector won't be able to pay back everything they borrowed from the bank because businesses are closing, people are out of jobs. So there are also some losses on the private sector as well, right? So you have those three types of losses. The biggest source of losses, though, is the central bank, the losses at the central bank. And now the fight in Lebanon over who would basically bear those losses, okay? Now, the banking system did not really recognize those losses. They say, no, those losses do not exist because, and they don't say it this way, but I am going to tell you, exactly how they are thinking about it, because they are saying we can print as much Lebanese pound as we can. Anybody who needs his dollar, we can print Lebanese pound and pay it back in Lebanese pound, so we don't have any losses. We have the printing machine, right? The problem with this solution is that it will lead to more hyperinflation, more devaluation, because the more Lebanese pound you print, people will go and convert it to dollars, and the more devaluation of the lira you will have. So that's one perspective they have. The other perspective is to say that, well, listen, guys, the central bank and the government are both public sector, right? So the public sector owes us money, okay? Indeed, we made losses because the public sector is not paying us back. The public sector should pay us back. If the public sector is unable to pay us back our money in cash, let's design, they called it a sovereign wealth fund, where you would put in this fund some government companies, government-owned companies like the telecommunication companies, like some real estate, some very expensive real estate owned by the government along the coast of Lebanon and things like that. And we will appoint a private company to manage this fund, and this private company can pay, this company, it will be probably appointed by the government, and this company will manage those funds and pay us back. They don't talk about privatization, by the way. They talk about managing those funds in order to pay back the bank's debt, so the banks will pay back their deposits. So that's the bank's plan, right? The government plan is to say, well, listen, guys, you made losses. We don't care how you made it. You are unable to pay your depositors. So you are in a situation of a bankruptcy, right? You are insolvent, and we need to shut you down. So basically, let's slash your capital. You have $80 billion of losses. Your capital is $20 billion. So we basically deduct your capital, and the remaining losses are $60 billion. And those $60 billion remaining losses will be spread across depositors. And that's where people start talking about the fair distribution of losses. And some people are saying small depositors should not bear those losses, large depositors should bear them instead, and things like that. But the government plan is basically you wipe out banks' capital, so bank owners lose the ownership of their bank, and for the remaining loss, you do a haircut on depositors, and the debate is how much the haircut will be and who it will be. Now, those are the two main plans discussed in Lebanon, right? I do believe that both plans are very bad. The bank's plan is very bad, and the government plan is very bad. I think that we cannot deny the existence of the problem, as the banks are trying to do. And however, we should not rush into liquidating banks as the government is trying to do, okay? Because banks hold depositors' money. So if you close the banks, depositors will lose their money. That's the haircut, right? What we need to do, we need to allow the bank to start making profit and to pay back depositors from those profits progressively throughout time. Instead of liquidating the whole financial system, okay? What we need to do, we need to freeze the problem, kickstart the economy, and we will talk about that in a minute, kickstart the economy, and once the economy runs again, the banks can go back to their financial intermediation operation. They can start making some profit, and from those profits, they can pay throughout times depositors. Now, who would you pay first? That's a political decision, probably. We can follow the Madoff system, where basically people lost the interest they have accumulated, but their initial capital was paid back progressively. You can start from the smaller depositors. But here I'm not talking about distribution of losses. I'm talking about paying back people's deposits, and nobody seems to be interested in this solution. And that's really unfortunate. I think that the banking problem, so now we have those deposits that the banks cannot reimburse, okay? We say, okay, we will deal with them later. But banks start working again, probably with fresh dollars, give loans, start taking deposits, and we can design a system that allows them to do that, and we'll talk about it in a minute, right? Start making profit, but those money won't go to the shareholders of the banks. They need to go to the depositors to whom you owe money, and progressively you can pay them, and that's how we should be, I think, dealing with the banking crisis. However, it is very important to separate this crisis, which is the banking crisis, from the currency crisis. Okay? Whether we deal with the banking crisis through a distribution of losses, or through the bank solution, or through whatever solution you want, that's a separate issue from the stability of the Lebanese pound. And people tend to mix both problems. When you tell them we need to stabilize the Lebanese pound, they talk about the distribution of losses. No, the distribution of losses is the banking problem. Okay, let's talk about the currency problem for a moment. Why do we have a currency problem? Because we are printing Lebanese pound. It's not related to, we are printing Lebanese pound to allow banks to have their, of course, they are connecting them, but theoretically and in principle, they are not connected. In many countries, you can have a financial crisis without having a devaluation of the currency. In Lebanon, we decided that we want to devalue the currency to help the banks, and I think that that's a bad idea, right? So I think that if we stop printing lira, if we stop printing Lebanese pound, the currency problem will be solved. Right? Whether we solve the banking crisis immediately through a distribution of losses, or whether we wait until we kickstart the growth and then we pay back depositor, whatever solution we want, it is irrelevant to the fact that we can fix the currency problem today.
I see. Okay, so let's conclude with some solutions, some possible solutions to this horrific problem that we're in. How do we get out of this deep hole that we are in? What can be done in the near term to prevent further deterioration, which a lot of people are asking? And what is needed to revive the economy in the longer term?
Okay, so imagine that by a miracle, we solve the banking problem, okay? Banks don't owe depositors money anymore. We do a haircut or whatever. We solve the problem, okay? Will the economy restart? I don't believe that it will restart, because the underlying problems that have caused this crisis at the first place are still there. And those underlying problems are that the central bank is still able to lend the government money. The government will still spend more money than their income. They will keep on accumulating debt. The central bank will keep on funding them. And how will they fund them? Probably through financial engineering operation. So actually, even if we resolve the banking problem today, okay, it doesn't mean that people will regain confidence in the system, because they know that this system will lead to the same exact problem. What we need to do we need to reform our monetary system. We need to forbid the central bank from lending money to the government. If the government needs to, the government ideally won't need to borrow money. They spend as much as they have income, revenues, right? But if they need to borrow, they can borrow from the market, from the public, through the bond market, or from the banks, or from the international market. That's how in all countries, that's how countries finance themselves. You never print money to finance government. Only in hyperinflating countries you do that. Okay? So we need to forbid the central bank. So by law, you need to stop the central bank from being able to fund the government. 2, you need to stop the central bank from being able to do a Ponzi scheme, again, which is basically you need to tell the central bank you are not allowed to take deposits from the commercial banks and offer them interest rate. This is not allowed. Commercial banks have money. Well, let them lend it to the productive economy. Let them lend it to the people, to factories, to farms, to foreign countries, I don't know, or to the government, but they cannot deposit them at the central bank, okay? So that's a second type of reform that you need to do. And the third type of reform that you need to do is you need to stop printing money that is not covered by foreign exchange, right? Because if you have as much Lebanese pound in circulation as dollars in reserve, you can convert your entire Lebanese pound supply into dollar at a fixed exchange rate. You won't have any devaluation. The problem is when you print too much Lebanese pound that is not covered by dollar reserve, well, you know, you have now doubled the quantity of Lebanese pound with the same quantity of dollars. Well, the Lebanese pound will lose half of its value. That's the definition of a devaluation. So you need to stop the central bank from being able to print money in a discretionary way. And you need to tell him you are only able to print money if it is covered 100% by reserves, by foreign exchange reserve. If we do those three reforms combined are called a currency board. So I believe that a currency board can solve the problem in Lebanon because it will bring the confidence back by saying that the problem that have caused the crisis, well, we solved them, right? The cause of the crisis have been dealt with. Okay, instead of talking exclusively about the consequences of the crisis, we would be solving the causes of the crisis. And the currency board will will strengthen the Lebanese pound and will fix it and will stop the devaluation and the hyperinflation immediately. All the countries that have applied a currency board, whether I talk about Hong Kong in the 70s or Eastern European countries in the 90s, Bulgaria, Lithuania, Estonia, 80s and 90s, or even Argentina, which was not really a currency board, but was something similar to a currency board. All those countries had an appreciation of their currency, and then it was stable forever. You stop the devaluation of the Lebanese pound, and the currency board can do that immediately. And when you stop the devaluation of the Lebanese pound, you save people from poverty, because the main reason of poverty today is that people with the same salary can buy less and less things because of the devaluation of the currency and the resulting hyperinflation. When you solve the currency problem, and here I'm not solving the banking problem, right? But if we solve the currency problem, we will be saving people from poverty, we will be stabilizing the exchange rate, we will be stopping inflation, and when you stabilize the exchange rate, then you might have some investors returning to Lebanon, because today nobody would put any money in Lebanon. I mean, you know, today it might be very interesting to invest in farms, for example, in Lebanon, because assets are cheap. If you have fresh dollar, you will have 50-60% discount on any real estate that you want to buy, or any apartment, or any company, or any farm. Despite this massive discount that you can have on Lebanese assets, nobody is investing in Lebanon, because if you invest in a farm, today the exchange rate is 12,000. When you want to sell the milk or the meat that comes out of this farm, maybe the exchange rate becomes 30,000. And so basically when you convert your income back into dollar at the expected exchange rate, you would be making huge losses. So although the assets are cheap, their currency risk would prevent anybody from putting a penny in Lebanon. When you do a currency board and you stabilize the exchange rate, you would encourage people to come to Lebanon and take advantage of the discounted assets. They will have lower risk, lower currency risk specifically, but a higher return due to discounted asset, and low risk, high return can attract investments back to Lebanon. That's how you can kickstart growth, start making a profit, the bank can go back to business, make some profit, and pay back depositors. So I do believe that the solution should start with the solution for the currency before resolving the banking system. Once you stabilize the currency, kickstart growth, we can talk about the distribution of losses or whatever solution they would like to discuss about the banks.
Well, that was very informative. Thank you so much, Patrick, for all that information.
Real pleasure. Thank you for hosting me.